My friends, today we are witnessing yet another turning point in India's global economic story, a story that may not sound dramatic on the surface, but has far-reaching consequences for farmers, exporters, global food chains, livestock feed industries, and even international diplomacy. India, after a long gap of 2 years, has lifted its ban on the export of boiled rice bran. Now you may ask, why is this so important? Why does something as technical and niche as rice bran oil cake or boiled bran suddenly matter in the larger scheme of global geopolitics? And that's where the real story begins, because hidden in this quiet policy decision lies a much bigger narrative about India's role in global food supply, about farmers' incomes, about how New Delhi balances domestic needs with global influence, and about how even the smallest looking commodities become bargaining chips in trade negotiations. So let's dive deep into this, because the decision is not just about allowing an export, it's about signaling India's confidence on the world stage. It's about unlocking markets that were blocked for 2 years, and it's about a country telling the world that its agrarian backbone is stronger than ever. For those who don't know, let's start with the basics. When rice is milled, the brown outer layer, the husk, the bran, that part is usually separated. From that bran, oil can be extracted, rice bran oil, which is consumed as cooking oil and also used in food processing. Once the oil is taken out, what remains is boiled rice bran. This is not waste. It is an extremely valuable byproduct. It is packed with protein and nutrients. And where does it go? Mostly into the livestock industry. Poultry feed, cattle feed, fish farming, all of them depend on boiled rice bran. So when India stopped exports 2 years ago, it wasn't just a local matter. It sent ripples across Southeast Asia, across the Middle East, and even into Europe, where animal feed importers suddenly had to pay more. Because India is the largest producer of rice in the world, and consequently one of the largest producers of boiled rice bran. So banning its export meant squeezing the supply chain worldwide. Why did India impose that ban in the first place? Let's rewind 2 years. Back then, global food inflation was skyrocketing. Remember, we were just emerging from the COVID pandemic. Supply chains were disrupted. And then came the Russia-Ukraine war, which hit global grain exports badly. Prices of wheat, corn, and soy shot up. India itself faced inflationary pressures, especially in edible oils. The government at that time took a protective stance. It said, let us keep our rice bran products within India so that domestic cattle feed and oil processors don't suffer. It was a classic case of protectionism to ensure that Indian consumers and Indian farmers had stability. But the unintended effect was that exporters, millers, and traders lost markets they had built for years. Buyers in Vietnam, Bangladesh, Thailand, and even Europe had to look elsewhere, often paying higher costs. So while the ban protected local consumption, it also made India look somewhat unreliable as a supplier in certain segments. That's why today's announcement of lifting the ban is a big signal that India is back, that markets can once again look towards Indian suppliers, and that New Delhi is ready to project confidence rather than fear. Now, why is this decision coming at this particular moment? This is where the geopolitics angle becomes very interesting. At a time when India's ties with the US and the West are under scrutiny over oil imports from Russia, at a time when China is expanding its influence in global commodities, India is quietly using its food and agribusiness sector to maintain leverage. Think about it. The world is worried about energy security, but food security is equally important. And India has both. It has the demand of 1.4 billion people, and it has the capacity to export surpluses. By reallowing rice bran exports, India is signaling to partners in Southeast Asia and Africa that it can step up when global supply chains are under stress. For example, poultry farmers in Bangladesh have been struggling with higher feed prices. Vietnamese aquaculture has seen input costs rise. By suddenly opening up exports, India becomes their savior. And what does that mean? It means goodwill. It means influence, and it means bargaining power in larger trade negotiations. Let's also talk numbers, because in trade, numbers tell the real story. India produces close to 10 million tons of rice bran annually. Out of this, roughly half is used domestically, while the rest can be processed for oil and feed. Before the ban, India was exporting nearly 1.5 to 2 million tons of boiled rice bran each year, mainly to Vietnam, Thailand, and the Middle East, at an average price of $200 to $250 per ton. This meant an export market worth over $400 million annually. That's not small change. Supports thousands of rice mills, traders, and logistics operators. During the ban, India lost this market, and other countries like Thailand tried to fill the gap. But with India back in the game, you can expect a big rebound in exports. In fact, analysts are predicting that within the next 6 months, India could regain 70% of its lost market share. But here's the bigger layer. This is not just about exports. It's also about farmers. Rice farmers in India often get low returns. They depend heavily on minimum support price, MSP, and government procurement. But when byproducts like bran gain value in the global market, suddenly the economics of rice production changes. Rice millers are willing to pay more because they can recover profits from selling bran. That money trickles down to farmers. So this decision could indirectly improve farmers' incomes. And let's not forget, 2025 is politically charged. Any policy that boosts rural income, that creates jobs in rice mills, that makes exporters happy, all of this adds to the government's political capital. Now, on the global front, let's look at how competitors react. Take Vietnam. Vietnam is a big rice exporter but does not have the same scale of rice bran exports. They will feel the heat of India re-entering. Bangladesh, on the other hand, will welcome this decision because they import a huge portion of their cattle feed from India. For the Middle East, especially the UAE and Saudi Arabia, this is also great news because they are trying to strengthen food security partnerships with India. So this one technical policy decision suddenly becomes a bridge of goodwill between India and multiple regions. And in geopolitics, goodwill is currency. But let's also examine the risks. Could this move backfire? What if global prices rise again and India suddenly faces shortages? There's always that risk. Critics argue that India has been flip-flopping on agri-exports, one day banning wheat, another day restricting rice, now lifting bran restrictions. Too much policy uncertainty can scare global buyers. That's true. If India wants to be seen as a reliable global supplier, it must ensure consistency. Otherwise, competitors like Thailand, Brazil, or even China will say, "Don't depend too much on India." So the challenge for policymakers will be to ensure that lifting the ban today is not followed by another sudden reversal 6 months later. But if managed well, this could be the start of something bigger. Because, let's not forget, rice bran oil is also an emerging superfood. Nutritionists talk about its health benefits, from lowering cholesterol to being rich in antioxidants. Global demand for rice bran oil is rising, especially in Japan, the US, and Europe. So the byproduct oiled bran could also see an indirect boost as oil processing grows. Imagine India positioning itself as both a food security partner for livestock feed and a health oil supplier for human consumption. That's a win-win. Friends, let me give you a story here. In 2018, before the ban era, a major Vietnamese aquaculture firm was importing hundreds of thousands of tons of Indian boiled rice bran every year. They publicly stated that without Indian supply, their production costs would rise by 30%. During the ban years, they had to turn to Thailand, and their costs did rise. That translated into higher prices of fish exported from Vietnam to the EU. Now that India is back, these firms are breathing a sigh of relief. This is how interconnected our world is. One decision in New Delhi affects farmers in Punjab, millers in West Bengal, traders in Andhra Pradesh, and fish exporters in Vietnam. That's globalization in action, And that's why today's policy shift has such wide repercussions. The bigger picture is also about how India is aligning its export strategy. The government has been very cautious with essential commodities. It wants to balance domestic stability with global credibility. By lifting the ban at a time when domestic supplies are comfortable, New Delhi is showing that it can calibrate smartly. It is not just about knee-jerk reactions anymore. This reflects a certain maturity in trade policy. And global investors will take note of that. Because if India can show that it has predictable policies even in sensitive sectors, it strengthens its case in larger trade deals, whether with the EU, the US, or regional blocs. And let's not underestimate the emotional side of this. For 2 years, thousands of exporters were struggling. Their warehouses were full, their contracts were canceled, some even faced bankruptcy. Today, they are celebrating. And in politics, that celebration matters. Governments need narratives of success, and this is one. The message is simple. India is open for business again. Our farmers will benefit, our exporters will rise, and our global partners will trust us again. Now, let's zoom out even further. This is not just about rice or agriculture. This is about how India sees its place in the world. In an era where the US uses food aid as soft power, where China uses soybean imports to wield influence, India is now realizing that it too has soft power in commodities. Whether it's wheat, rice, sugar, or now rice bran, India has the scale to shape markets. And that gives India geopolitical weight. Imagine future negotiations where India says, "We will keep your poultry feed affordable. But in return, we want better access for our IT services or textiles." That's how trade-offs happen. And that's how a so-called small commodity becomes a big bargaining chip. My friends, let me end this by saying that today's decision may look technical, but it carries immense weight. It shows India's confidence, it boosts farmers' prospects, it revives exporters' hopes. It strengthens regional goodwill, and it enhances India's global credibility. It also reminds us of a larger truth. In a world that is deeply interconnected, no commodity is too small, no decision is too technical. And no policy is without ripple effects. By allowing boiled rice bran exports, India is not just selling animal feed. It is selling stability, trust, and influence. And that, in the long run, is worth far more than dollars.